Good morning, everyone, and thank you for joining us on Morning Markets from True Potential. Today, I'm joined by Raj, and we'll look back at the performance of asset markets from yesterday, but also focus in on the discussion from the MPC. So just looking at asset markets, you'll see the ticker moving along the screen, but a good day for asset markets yesterday, Raj.
Yes, indeed. A strong day for equity markets across the board. Literally, Asian markets set the tone early in the day, with the momentum continued through the UK market and also in European markets. We also saw US picking up the speed towards the end of it. So I think a rather strong day across the board.
And not much movement in bonds, currencies yesterday at all, really.
Yes, and it's interesting because bond didn't react much because of the. I think most of the event has happened Wednesday on the Fed movements, and there was a large move on Wednesday. Also, England Bank of England raised rates. We didn't see much of movements in the gilts market as well. So rather calm day for both bond markets and currency markets overall.
And I think the Bank of England's quite an interesting thing for us to focus in on today, because there's a lot within the statement, a lot within Andrew Bailey's comments as well, and probably quite a bit of change within how the MPC are thinking about inflation. As we saw, if we go back to the February meeting, we saw 4 members voting for a 50 basis point increase. We didn't see that yesterday at all.
Yeah, I think that's an interesting pivot, or not probably a pivot, but it's just slight change in tone per se. As we were expecting, the Bank of England will come a little bit more on the hawkish side, and markets were really priced for that. And then you saw the Bank of England came and a little bit on dovish side, although they raised rates in the third consecutive meeting, which is not seen for a while now. So and now the rates are 0.75%, which is back to the pre-pandemic levels. So,
and what did they comment around inflation? Because they've obviously been over the past number of months, they've been revising up their inflation forecast. Did they revise that again yesterday?
Yes, we saw another revision from Bank of England, and Governor Bailey's up the inflation target of around 8%, up from 7.25% from February, and then clearly acknowledging the Russia-Ukraine crisis will have a continued impact for further few months. But interestingly, there's a comment in the comments there that they expect inflations to fall back materially in further months out there. So that's an interesting take.
And I suppose within that, they're expecting the higher inflation backdrop to pull down demand as well. So maybe they don't have to move as aggressively on interest rates as maybe some had been expecting.
I think that is a critical part. They have to strike a right balance so that do not jack up the interest rate so high that it completely chokes out the economic recovery. So I think it's a delicate balance, and I think they've probably got this balance right in the communication and letting the economy not choke completely.
And I suppose that's a bit of the paradox, where we're talking about higher inflation, but they're the central bank wanting the higher inflation to pull demand down for them and really do bit of the job for them as well.
I think that's interesting, and as the saying goes, high prices, the cure for high prices is the high prices themselves. It'll choke off a little bit of demand, which brings the balance back into the economy, and I think it's probably we probably will have to endure a little bit for the high inflation principle, but further down we see, and the Bank of England sees those inflation rates coming down quite meaningfully from here.
Brilliant. Thanks very much, Raj, for joining us today. Hopefully that's given you a bit of an insight into what came out from the MPC yesterday. We look forward to speaking to you again next week, and please do look out for the podcast coming later today.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.